The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with James Turk, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is James Turk. It's my pleasure to be doing this podcast with Robert Blumen. Robert's someone who I've known for a number of years, and we share a common thinking about the supply and demand of gold, which is going to be the topic of this podcast. Just to give some brief background information, Robert is a popular writer and speaker on Austrian economics. You've probably seen his writing on websites like the Mises Institute, LewRockwell.com, and others, and also the Gloom and Doom Report, among other financial newsletters. He's done guest appearances on radio and internet podcasts and has been a guest speaker at gold and economic conferences, as well as local libertarian groups in the San Francisco area. Robert, thank you for being with me here today.
Jim, I'm very pleased to be your guest.
I'm looking forward to pursuing this discussion. I really hope to, provide people with some perspective on the supply and demand of gold. I take the view that gold is money, and therefore I look at gold not as a commodity, but as a monetary asset. And I think that's pretty much the way you look at it as well, don't you?
Very close. I believe it's near money. It's not money, but it is an asset, by which I mean it's something people buy it in order to hold it.
It's money because it doesn't circulate as currency?
I would not classify it as money because it's not the final means of payment for most goods and services.
In the United States and Europe, but it is the final means of payment in places like Vietnam and Turkey and the Middle East, where it's regularly used as a form of currency.
Then I would count it as money in those places.
Okay. You wrote a piece several years ago called Mining Supply Doesn't Matter, or Mining Doesn't Matter. Can you just provide a little bit of background information on your thinking in that article?
Sure. What I noticed in reading a lot of research from the analyst community about gold is if somebody writes a 50-page report about the gold market, that 40 pages of that will be about mine supply. There was a real intensive amount of focus on whether mine supply is growing year over year or shrinking year over year. Then the analysts will give their forecast, and they say, I think gold supply is going to grow by 20%. That's really bearish, so gold price is going to be 25% less next year. I knew this was wrong, and my article was explaining why mine supply has very little impact on the year-over-year price trend of gold.
Simply because gold has this huge above-ground stock?
That's right, James. The price of asset is dominated by movements people make to balance their cash holdings against their holdings of the asset. The amount of gold that's mined represents about a 1% change in the total of all portfolio holdings. So that gets absorbed by the market in just a few days of trading, and it doesn't really have an impact on the balancing between these huge above ground stocks.
I like to make the distinction that, most commodities are, in fact, all commodities except gold are consumed and disappear. Soybeans are consumed and disappear. Crude oil's consumed and disappears. Even base metals are consumed in the sense that they're dispersed in millions of applications around the globe. And when that application is finished, quite often those base metals are just thrown away, rather than recycled, because it's not economic worthwhile to recycle, small pieces of base metal. But, gold and to a certain extent silver are very different. Gold particularly is accumulated. It does not disappear. It can't be destroyed. So all the gold mined throughout history still exists in this above ground stock. Now, the question I have for you is, why does gold exist in this above ground stock if it's not money?
I wrote a piece for the Mises Institute called Is Gold Money? The conclusion I reached is that gold now functions as a sort of shadow money, which people want to hold as an insurance against the failure of the current monetary system. And they know that if the current system fails, that whatever replaces it will involve gold as money. That's my view.
Okay. Well, let's look at mine supply relative to this above ground stock of gold. Let's assume that the above ground stock of gold is about, I've seen various estimates between 160,000 metric tons and 170,000 metric tons. And gold production in this current year is forecast to be about 2,700 tons. So we have less than 2% increase in the above ground stock of gold. Is this why mine supply doesn't matter?
Yeah, you can compare the mine supply to the total above ground stockpiles and you get the numbers you came up with. Another way I look at it is to compare the amount of gold sold into the market by miners to the total volume of gold transactions during a year. I did a back of the envelope calculation using some figures that are on the LBMA website. The LBMA is one exchange where I think it's large investment bars are sold. And the number I came up with is that mine supply would account for 12 trading days over a year on the LBMA. And that's only one place where physical metal is traded. So if you looked at all the trading in the world over a given year, mine supply is at best a few days of trading, which means it's very quickly absorbed into the market, and that almost all of the trading that goes on is shifting among different stockpiles or portfolios, as you want to call it, that already existed at the beginning of the year. And that is what sets the price. It's the trade among existing stockpiles of gold as people move back and forth between money and gold. The amount that comes from mines is a little blip in this big pool of trading, and it's not what sets the price.
Yeah. It's as if you had a stock of, let's say, Apple Computer, and you increased Apple Computer's shares in issue by 1.75% per annum. That 1.75% per annum increase in Apple's new shares that have been created are not a big impact on the price of Apple stock, correct?
That's absolutely correct. And if you think about if some analyst who analyzed Apple wrote a report and spent 40 out of 50 pages looking at the impact of the new shares and spent 10 pages writing about the company's business, you'd wonder what is this guy thinking?
Yeah,
but
exactly.
That's the norm in the gold market.
Any idea as to why the gold market has taken that approach?
My guess would be that you have a lot of analysts who started out their career in commodities, or they group gold in with commodities. And in a commodity type market, as you were saying a few minutes ago, you have production and consumption, and they have to stay in a pretty tight balance because there's not a lot of stockpiling. There may be days or weeks of stockpiling, but there's not 50 to 100 years of stockpiling. So if you look at production and you look at consumption and you see stockpiles are being drawn down, then you could make a reasonable forecast and say the price has got to go up because we're going to run out of stockpiles in 3 weeks. And that would be true for oil, for copper, for coal. But in the case of gold, you can't really run out of stockpiles because all the trading is simply people shifting their stockpiles around between themselves.
Yeah, understood. I guess that's actually the implication here is that gold is held in a form that's readily available for trading or exchange. In other words, it's been fabricated into coins, bars, or high carat jewelry, which I distinguish from adornment jewelry. High carat jewelry being purchased in most of the world, or in, let's say, Asia and the Middle East, for the same reason that in the West we purchase bars and coins. It's because it's money, or in your words, a near money, not because of reasons of adornment. So high carat jewelry typically trades in a souk in the Middle East or in a store in Hong Kong on the basis of weight plus a markup, just like you'd be buying coins or bars.
Yeah, James, that's a great point. And I even think that people in the West who prefer bar and coin form for investment purposes and buy jewelry mostly as ornament, they are still holding gold, and it's not destroyed. It can come back onto the market, and some jewelry does come back onto the market if for many different reasons.
Just like coins and bars come back on the market for many different reasons.
Sure. And I've heard people talking about this who say once an investor buys an investment product, they never sell. Gold bugs don't sell. They're taking it with them. And you can't. I read a report by a well-known research firm that said after gold trades 5 times, it comes permanently to rest in someone's portfolio, as if portfolios that people hold are not part of the market, but they are. And really the only reason to own an asset is you may sell it at some point because it doesn't have direct use value.
Yeah, that's a good point. You may sell it because you need to sell it, or simply because you want to sell it for some other reason, to take the wealth that you have embodied in the gold that you hold and place that wealth in some other particular asset at any moment in time. In other words, maybe you see something more undervalued than gold, or there's some other specific need, buying a house, for example, so you sell your gold. Let me ask you this. You're a proponent of Austrian economics, and I know you've written a lot for Mises.org and LeRockwell.com. In your view, why does gold have value? I know from the Austrian point of view that value comes from an item's usefulness and that value is always subjective. But in your view, why does gold have value?
I think it's through a process of social evolution. It was recognized as the best commodity to use as money because of various properties that many people have called attention to, that its durability, recognizable, difficult to produce more of it, but not impossible. The value to weight ratio is about right for making purchases. There's probably a few other properties. I know these have been written about by many people.
Going all the way back to Aristotle, actually. But so you've got 5,000 years of history of gold's usefulness compared to 40 years of fiat currency?
Yeah, I think when we look back at this period of time, it will be a brief interruption in a long history of gold's use as money.
So you see this as a bubble environment in which we're presently using fiat currency, thinking that it's really money, but it isn't?
It's a temporary and unsustainable situation which is going to play itself out, and in the end it will destroy itself, and then we'll have to go back to something or go forward to something that works better.
Yeah, understood. Does anything work better than gold in your view?
I would say leave money up to the market, and if the market comes up with a better idea, then I'm all for it.
So you're in favor of Ron Paul's free competition in currencies?
I'm not sure I'm familiar with that program in detail, but I like the sound of it.
Yeah, basically what it says is that there should be no government imposition to stop people from creating currencies. In other words, you let the forces of the market go and let the market create what is the best currency for society. Sure.
James, if you want to issue notes that say James Turk notes and you can get people to use them, then go for it.
Yeah, understood. But what I really want to do is issue, gold grams circulating digitally through your iPhone and other applications. But, governments are making life difficult for entrepreneurs and people with free market solutions that, might help solve some of these problems. But maybe that's a discussion for another day. But you bring up the point about notes. Do you see currency evolving from notes to iPhones and other types of applications as the next major step in the evolution of currency?
I have made some back of the envelope calculations of what would the purchasing power of gold have to be if the entire world replaced all existing money with gold, and you get a pretty high number. It's in the thousands of dollars relative to the purchasing power of a present day dollar. So clearly the purchasing power of an ounce or even a gram of gold is very high relative to a lot of the transactions that we make every day. So does that mean either we would need to monetize other commodities with a lower purchasing power, or maybe what you're envisioning is through my cell phone, I could transfer to you a milligram of gold if I want to buy a coffee or something that would be too small of a quantity to physically, I couldn't take a coin and shave off a little milligram shaving, but with electronic payments processing, it would potentially give us a solution to that problem of divisibility and purchasing power per unit weight.
Yeah, that's exactly my view. Essentially, it takes gold from just being a sterile asset into making it a very practical and useful modern currency. But we'll see how how things evolve in the months and years ahead. Getting back to this point about gold is money, or gold is a near money. Why do you think people call gold an investment? Gold doesn't have a balance sheet, doesn't have a management team, it doesn't have a PE ratio, it doesn't even generate cash flow. How did we come around to calling it an investment?
My guess is that anything people own through a brokerage or a financial account that's not cash, people call it an investment. That would be my guess.
Yeah. It's really weird, though, because gold doesn't generate cash flow. If the price goes up, all you're doing is transferring purchasing power from people who own fiat currencies to people who own gold.
You have people like Warren Buffett coming out and Grantham and various famous value investors who come out and say, why should I own gold? It doesn't have cash flow. It doesn't make anything. I'd rather own great companies. Gold is something that you own as part of the cash portion of your portfolio. It's not a risk asset. It's not fair to compare it to risk assets.
Yeah, the comments by Buffett were a little bit peculiar. I can understand his point of view that he wants to own good investments, but he also has liquidity in his portfolio. He owns dollars and maybe he owns foreign currencies as well. I think he's comparing gold, to the wrong thing. He should be comparing gold to the dollars he owns or to the foreign currencies he owns to determine which form of liquidity he wants to have in his portfolio. Would you agree with that?
Yeah, I totally agree, James. I don't have anything to add to that.
Yeah, okay. Well, let's get back then to this question about the supply and demand of gold. What's it going to take for the gold industry in general and the dozens of gold analysts out there to really start looking at the big picture, to understand that it's the above ground stock of gold that potentially, above ground stock of gold, not potentially, but actually is the supply of gold, and that the little bit of mining production every year is not really a big deal in terms of the price discovery mechanism for gold.
I think it's shows like this one and getting the word out. I know I've read a few reports by analysts who are starting to come around to yours and my view, and they've told me that when they present this to investors or portfolio managers, that many of them slowly start to get it. So I think we're making some progress, and if we keep chipping away at it, that opinion will shift.
Okay, well, that's encouraging. Well, very good. Thanks, Robert. I look forward to more of your articles on this question of, does mine supply matter, or, the big picture in terms of the supply and demand of gold. And hope you'll have more of those in the not-too-distant future. If you want to publish any on the Gold Money site, we'd be more than welcome to publish them for you.
Thank you very much, James.
Thank you, Robert.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.